Welcome to the Daily Energy Markets podcast. It is September 14th, Wednesday, middle of the week. We have oil markets a little bit off, but nothing dramatic. It seems to be holding the gains that were captured at the end of last week. But with Brent firmly above $92 a barrel, WTI still below the 90 level. The spread between the two does seem to have grown, but nonetheless, it would seem the oil markets were fairly nonchalant about the big shock news yesterday, which saw, of course, a surprise on the core inflation in the United States, which has now signaled a trigger for a more robust tightening cycle. At least that's the expectation now. Let's welcome and start. We'll go all the way around the world because we're literally all the way around the world today, from Australia to Florida and Italy in between, and of course Dubai. So I think we're literally circling the globe this morning. But we'll start with Peter McGuire, CEO of XM Australia, looking out on Bondi Beach. Peter.
Well, good morning. Good morning, Sean. I'm actually Coogee Beach.
Coogee Beach. Sorry.
Greetings to everyone. Yeah, I was up late and I just watched it. I mean, it was an ouch of a night. It was spanked down the Nasdaq, as we know, down over 5%, and it just took everyone, I think, by a little bit of surprise. The energy markets, as you said, they were positive there for a while. They whipsawed a little bit, but King Dollar reigned supreme, and the market, I'm just noticing now, just across the blast here, at 9.9% for UK inflation. So, you know, it's high. How do we manage it? They're going to ratchet it up. Are we 75 basis points or 100 basis points? Everyone's scratching their heads a little bit, and Australia was down 2.6% today. Asia was washed out, and equity markets are under the pump, Sean.
Peter, one of the ramifications of yesterday's news was also the return, not the return that it was gone for very long, but nonetheless, the sort of mighty climb of the US dollar was back in front and center, and particularly as we continue to cover its impact, particularly versus the yen in your corner of the world, but the dollar back very strong. What's the ramifications for that, do you think?
Well, Sean, I mean, here we are, 109.80, that US dollar is 110 or 111. Traders are saying to me, we thought that 145 was going to be the line in the sand for the yen. Well, I tell you what, it's just as well, it's touched it, or nearly close to it. So is the new number, this is what traders are saying, is 150 the new handle for the yen. I mean, 150, what it's done this year is just mind-blowing. A 112 to 110 handle for the pound, and 96 to 97.5 for the euro, because everyone just says that we're onward and upward for the Fed to charge rates. They've got that inflation number. Their mantra just seems to be just, ratchet it up, Sean. So the issue is going to be, and the impact is naturally to the countries like Japan, their currency is being created, and the cost of energy is just going through the roof. So it's going to be a double whammy for them. And maybe we're at a 112 by October, mid-October to end of October. That's a very, very strong number, Sean, US dollar index.
Oh, and Peter, from your own analysis, why do you think the Bank of Japan are not intervening? They have been quite interventionist in the past. On this occasion, they're basically absent.
Well, they're certainly sitting on their hands, and I mean, you could write.
Their hands are chopped off at this stage, I would think.
Well, yeah, maybe the Yakuza have got
sitting on their hands 30 yen ago, maybe.
That's right. Well, they just doesn't. I mean, you could write a thesis on it, as far as what the BOJ's thoughts are. We're going to see inflation start to ratchet up strongly if it can in Japan. Aging workforce, you're talking about, they're still locked down to some extent from travelers and tourism dollars. So all of that, they've got to open up their doors, and they've got to get hard currency in there. You've got to turn Japan into the travel destination that it deserves to be, and it used to be. And they need to take on board hard currency. They need to look at where their yen is going, and maybe that's their master strategy, to weaken the yen and make all their exports more competitive.
Speaking of major geopolitical positions, we've got the president of China and the president of Russia meeting, arriving in Central Asia for the Shanghai Forum, first meeting since before the invasion. What do you think is the impact, the sort of optics of that from the posture of an Australia or from the Western Alliance point of view? Where do you think China goes with this relationship?
Well, we're looking very closely from an Australian viewpoint, Sean, naturally, because we're right in that corridor. So maybe our lens is a little tilted, different to how the West is viewing it. But from an Aussie perspective, we're worried about what's happening as far as the strength of that Chinese economy, our exports, and the overall themes, the joining of the hip between the Russians and the Chinese, how that moves forward, both geopolitically and economically. Now,
I mean, one of the sidebars on that story is the Chinese getting a further footprint into some of those Polynesian island states not too far away from you, which were previously sort of safe harbor for Western naval vessels, including Australian, who have recently been told to get out of our waters.
Well, that's right. The likes of New Guinea, the Solomon Islands, you're thinking what happens as far as Fiji, run yourself, as you mentioned, across that Polynesian basin. That really creates a lot of angst for both from a defense standpoint and from, I think, a Belt and Road initiative. This may not be Belt and Road. It may be even more influential than that, and the impact that can have to someone like Australia. So yes, it's a changing of the tide. There's some major impacts, I think, across the next decade, and how we manage those, and both with a new government in Australia and what their overall theme is towards China. And we're so reliant on them from an export side. So yes, Sean, we've got our eyes on the board and just taking it and inhaling the rhetoric that comes out of it, and the viewing of what the situation presents both to markets and to overall economy across Asia.
I haven't quite worked it out yet in my head, but a part of me is starting to think that the deep state of American politics, geopolitics, wants to force China into a closer relationship with Russia and sort of get into the chaos of Putin. And what does the chaos of Putin bring to the stable, nice, calm universe that the Chinese love? I think that's an interesting dynamic that still has to play out. We won't get into it now. We'll think a little bit about it. Okay, Peter, speaking of viable and a very critical part of the Saudi and OPEC plus outlook, and for all of us perhaps, is as you articulated earlier, where does China go? Where does China demand go? And as also Mike referenced, China is in a very difficult place in terms of its economic performance. There was an expectation, there is a certain expectation that once the Communist Party conference is completed in mid-October, that we'll start to get a backing away from the zero COVID policy. We'll start to get a sort of a China we're all familiar with. Your thoughts on the likelihood of that happening?
Well, I think domestically, the people, the population would love that. They'll be rubbing their hands with glee, Sean, if that's the situation. The second part of it, of course, is we've got not only a slowdown, but a very, very worrying property market. And that's creating a lot of angst, both internationally with international banks and with all forms of debt holders across their property market. So that's another major impact to the market that we're all looking at and all absorbing and realizing that is October when we see the end of the meeting and the strategy and everything moving forward. This is what's going to be presented to the market. Yes, we've had the lockdown start to be eased, but is the property market going to be the number one concern, economic growth, and how China manages those expectations?
Thank you so much, Peter McGuire from Australia Around the World. Mike McGlone in Florida, Reem Shamsuddin sitting in beautiful northern Italy. No more nicer place this time of year, you'd have to say. All the best, and get out and vote, Reem, next week. It's important. We'll be relying on you to swing it the other way. All the best, everybody. Every morning, 10:30 UAE time. Thank you.
Cheers, Mike. Thank you, Sean. Bye,
Cheers.
Reem.
Cheers, Peter. Cheers, Reem.